Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a wonderful Wednesday so far. Today we're going to be diving into our daily cryptocurrency market update, where we look at everything crypto. Predominantly, we are going to focus on the cryptocurrency space in this video. You guys know that we not only in these updates look at the crypto market, but we look at the external world around us, as we know that we are affected by it. But we're going to be doing a lot of looking into on-chain data in this video. We're also going to be really stressing the fact that this bull run, in my opinion, is absolutely going into next year. We haven't seen what would typically signal a bull run end, and there's a lot of data to suggest that we are going to lengthen in terms of a cycle and continue into next year. And this is something that we spoke about on our Brave New Liquid Coin Index, where we've looked at the fact that cycles are lengthening. We're going to show you some confirming data for this. We're also going to be talking about the fact that how the Chinese, or certainly the Asian selling pressure is waning. And this has a lot to do with the fact that liquid supply is moving off of exchanges, so it's becoming illiquid, which helps with the liquidity to the buy side and the downside. You know, if there's less Bitcoin on exchanges, it means there's less sell pressure theoretically. So we're going to get into a number of things. This is important. We will look at our sort of traditional financial world indicators. You know, we did say the S&P would have an uptick yesterday following the FTSE and oil. It did indeed do that, but it was crucial levels that were actually broke. Some significant descending resistance on a number of different cryptos was broke yesterday, and Bitcoin is leading this charge, as it always does. And altcoins are now having the kind of green light from Bitcoin following suit. So we'll get into that to start with, then we'll get into our on-chain data, take a look at some of the articles floating around that sort of support the data that we're going over, and then we'll look at our traditional indicators, and we'll also, as we're going through, talk about the fact that this bull run is not over. And crypto at a $2.3 trillion has a hell of a long way to go, ladies and gentlemen. This is something I posted on my Twitter. If you're not already following me, head over to @RealAllinCrypto, and you can see, you know, this is what I think you've got at hand. You've got a technological revolution taking place, and you're at the very start of that. And we're yet to see this technology really grip a hold on the world in ways that previous technology has done. And that is all coming, and certainly the cryptocurrencies with staying power and real use case are going to do very well. So the crypto market's green today, seeing nice little pumps from coins that have, you know, been held under pressure. Bitcoin really broke this descending resistance that it was in. And those of you that follow me will know that this is essentially what we said was going to play out for Bitcoin. Since we had this wick, since we had the sell-off, we said it's likely that you're going to capitulate before setting up structure. And there's a lot of similarities between what you're currently going through here and what you've done over here, guys. And providing that you hold support here, you could be in for a nice little pump like we saw over here. Ultimately, I think the bull run is going to continue, and Bitcoin is going to go on to make new all-time highs. We think this is kind of a macro structure that you're in right now, this ascending triangle. And ultimately, we'd like to see this play out in a similar way to what we saw this one do. You know, there are a lot of similarities in them, certainly with these pumps, this marginally higher high. We come back down, people calling for a double top like they are currently, and then we see continuation, because this is an asset class that has a long way to go, and certainly Bitcoin does as well. And we know that there's a world of pressures surrounding Bitcoin in the crypto space, like the dollar, its strength, so on and so forth. But one thing that is absolutely obvious is that inflation isn't going away anywhere, and they can tackle it in whichever way they want. They can within the growth of anything, there's going to be ups and downs, and that's what you're seeing today. But ultimately, as long as you've done your due diligence and you understand what you're investing in and the value proposition behind it, you'll do very well. As I think crypto is only going one way, and that is up. Certainly on the long term, with the short to mid term, it can be quite volatile as it's an emerging market. Ethereum doing very well. Like I say, anyone calling for a bear market should have been paying attention to the Ethereum chart. I mean, it's looking very strong, ladies and gentlemen. This is higher highs and higher lows really since its inception. And Ethereum, I have a bit of a hatred. I hold all my Ethereum, but I've got to admit, as far as a blockchain, it's completely unusable due to its gas fees. Even somebody like myself that, you know, has a little bit more money perhaps to play with, it's just a bad deal at the moment. The gas fees are ridiculous, and I can't really see a end to that. And this is why you're seeing a mass exodus to things like Polygon and other layer 2 solutions. So I still hold all my Ethereum. I'm still very bullish on the fact that ETH2 is around the corner. When I say around the corner, you know, next year sometime. Hopefully, if it goes any longer, I think they're really going to suffer as a blockchain due to that. Cardano also followed suit with Bitcoin leading the market and broke out of what we were looking at here. We did say, and it looked very close yesterday, you came up and you rejected. You found support on this EMA before you saw that continuation. It's beautiful, guys. And we're ultimately expecting like I say, this bull run to lengthen in accordance with previous cycles and how they've lengthened to date in comparison with the one before it. And we're going to get into some data supporting that in just a second. So let's talk about some of the on-chain data that we have. This is the illiquid supply change, the 30-day moving average. Bitcoin supply is moving from a liquid to illiquid state at a rate of 100k Bitcoin per month. Illiquid coins are those sent to addresses with little history of spending, generally associated with investors accumulating and bull market buyers. Every time we see a dip for Bitcoin, it's not just Bitcoin, a lot of the altcoins follow suit. What we see is we see big players, big whales stepping in and buying those coins up that retail are getting scared out of, if you will. The fear and greed index is still at fear, but we're a little bit better than we were yesterday. This could explain why we're seeing so much of this. This is Bitcoin Huobi Exchange Balance 7-day moving average, and we can see they're going right down. This has everything to do with the fact that Asia, essentially China, is cracking down on Bitcoin and the exchanges, and Huobi essentially has been kind of banned from supplying the Chinese citizens. Real sad, because ultimately, you know, this would have been a real liberating thing for the citizens of China to have some sort of a currency outside of the Chinese party. But of course, the government banned a lot of things over there, and it was no surprise that they were going to ban a decentralized currency. Huobi Exchange is a key driver for BTC Exchange Balance, falling further this year. Now 84% since March, down since May, sorry, as users sell or move their Bitcoin off in wake of the China shutdown. And we can see this huge sell-off. I hope you can see. I'll move my head slightly. I hope you can see that, you know, and this has a lot to do with the sell pressure that we've seen for Bitcoin recently. China have always played a role in our market, whether that be them banning Bitcoin, banning miners, so on and so forth. And with the miner situation, when they banned it, it was actually a massively bullish thing for Bitcoin because it really helped to decentralize the network. China had, I think, over 50% of the hash power for Bitcoin, which is the computing power that goes to sort of run and validate the network. So the fact that we've seen them get shut down and the hash rate is almost where it was, I think we're a couple of percent off, you know, shows that not only has the Western world really captured more of the Bitcoin mining power, but also the network as a whole has been very decentralized and is more secure as a result of that. This is the consolidation phase comparison. This is comparing previous cycles, and you can see they do get longer, but we're going to show something that more accurately illustrates that, and of course talk about our own analysis on it. Where are we? So this is the reason for current extended sell-off / short. Asia's largest exchange, Huobi, has stopped relating trading in China. Bitcoin has been flowing from Asia to the US and Europe for some times. And that's why he's saying this extended sell-off. And he's looking at previous cycles where we've had, and we've done this previously, and there's a huge thread on this, which we read a couple of videos ago, still up there in our cryptocurrency market update. And you can see, you know, we're at that stage now. And this is an article kind of covering it all from CoinDesk. First mover, Asia bumps send Bitcoin over 49k. Selling pressure from Asia appears to be abating. The Hong Kong crypto lender Babel wrote. So things are all moving in the right direction. This is a little bit on the sort of lengthening cycle theory and where this individual root thinks we are. And you can see this is the first halvening. This is the second halvening, and this is the third halvening. We've done our own kind of version of this. You can see what happens after the halving. But this sums it up really well. And he thinks that we're at this kind of 6 point here previous to 2013, and we get the kind of parabola at the end. On-chain short-term hodlers cost basis, the average price that short-term hodlers buy Bitcoin is currently 52k. If we're indeed at number 6, Q1 2022, will be insane. And that's exactly what we're expecting. We're expecting bull runs typically end in a blow off top. This next one kind of sums this up. It's 2011. You can see that not only are cycles lengthening in terms of time, which we've already shown you previously. Stick with the channel, guys, because we'll tell you everything that you need to know about the crypto space. We're all in crypto. Yes, we cover more coins than others, but generally we'll give you a good idea of what's going on with crypto. And you can see not only are cycles lengthening, but the kind of they're diminishing in terms of return. It's the law of diminishing returns. The market cap moves up, more money is needed to flow into it, and this kind of has a effect on just the parameters of how much percentages you can go up as there's more money needed to move it. And you can see that here we've got volatility still in range with previous cycles. All cycles finish with a parabolic run, and we've not had that today. I think we'll get that probably into next year. We're expecting it at the end of the year, following the Bitcoin 4-year cycle theory, but we've only really had one proper cycle. It's something I've followed, and it's allowed me to make a lot of money in the space, the Bitcoin 4-year cycle theory. We've been following it really since 2018, invested heavily in the bear market in the hopes that it would play out. It played out kind of today until the end of the year, which we're currently in, and now we're getting, and I've always really had that confirming data that perhaps cycles are lengthening and will continue, and maybe we're more of a mature market. There's fundamental and technical reasons for this. We've covered it in great detail a number of times on the channel, but I just thought these were some really interesting things, because one of the main takeaways is there are fundamental reasons why things sell off. TA does work, but you've also got to look at TA and fundamentals. So if you can have the technicals with the fundamentals, you're going to get a far better picture than just following one and not the other. So that's what we try and do on this channel, and ultimately fundamental reasons for sell-offs, but fundamental reasons, technical reasons also, such as head and shoulders, so on and so forth. When you're still in a big head and shoulders continuation pattern that I personally think you're in, this was what we did. If you go on my Twitter, we've actually pinned this to the board way before Bitcoin had even broke to the downside. We've been getting calls right for a very long time. We might not get all the short-term calls right that we make, but certainly the macro trend we've got pretty spot on. So financial markets are still seeing an uptick. We saw a bit of a deep close to the downside for the FTSE, but that's been bought up. Seeing strength across markets as a whole. This is all due to everything that's happening on a macro global stage. There's been a bit of a pushback from governments in regards to inflation, but it's something they can't stop, and I think more and more people are realizing that. And I also think that there was quite a bit of scare and uncertainty due to the new variant. That's still going to play a role, but we're yet to see how that plays out. So yeah, that's why it's always good to fall back on your fundamentals. The S&P, we actually said the S&P was going to open like this. This was the candle we had yesterday. Before it opened, we said you're going to see an uptick because we saw other markets do that, and typically these markets are very correlated and will follow. So this is the Bitcoin shorts that I've been looking at. I'd like to see more shorts opened. People shorting Bitcoin is extremely bullish for the Bitcoin price. That sounds insane, but the reason being is because if you get a short squeeze event, and what you'll see over here is these were short squeezes that had a very positive effect on the Bitcoin price, is essentially they become forced buyers. So it has like a kind of slingshot effect, but we'll cover that in more detail in another video. So I'm going to love and leave you on that note, guys. We're looking good so far. Let's see if we can kind of hold support here and really see where this takes. When you get overextended from your EMAs, you will typically come back. Hopefully we bounce off it and we get that continuation, and we're seeing similar structure that we saw over here that we're seeing today currently, ladies and gentlemen. We see a bit of a rest, we let our EMA creep up, and then we see that continuation. I'm going to love and leave you on that note, ladies and gents. Enjoy the rest of your Wednesday, and I'll catch you in a video later on today. Thank you very much for watching, guys.